In terms of China stocks, it's been a pretty wretched year so far in 2023. We've got the Hang Seng Index down 20% from a January peak. A lot of gloom generally around Chinese equities, but through all that, you're remaining overweight. So tell us something good. Where are the bright spots?
Of course. Firstly, I think the economy is on track to a recovery. And the uncertainties, however, would mainly be the magnitude and the speed of recovery, which can be off-tracked by external pressures. For example, the geopolitical tension between the United States and China, which is ongoing at the moment. And of course, the CNY weakness against the US dollar is not helping out on the valuation of the stocks or equities that's traded in Hong Kong dollar. So we are quite confident about the recovery in terms of the physical economy, and therefore the earnings revisions upwards can eventually be quite sustainable going forward into the 2023, the rest of 2023. And therefore, valuation-wise, the market as a whole is looking very undemanding at the current level.
So does that recovery, though, happen without stimulus? And I mean aggressive stimulus, because liquidity doesn't really seem to be a problem here. Do you see anything more might be needed to juice the economy in China?
Definitely. I think right now, when the economy is not recovering quicker than what's expected, I think there's a good chance that the government can step in again and impose some more stimulus in order to drive the economic recovery speed going forward. And therefore, that can be a catalyst going forward in the near future.
Consumption, though, has sputtered. I mean, there were high hopes that after the COVID-0 reopening, the Chinese consumer would come back in force. It's been a little bit of a mixed picture. How confident are you on the discretionary sector in China?
I think in terms of recovery, consumption is also on track in the way that we've seen tourism doing really well. We've also seen some restaurant chains doing really well. And therefore, I think, again, is on track to a recovery. However, in a full-scale kind of a consumption recovery, it may need a little bit more time. But we're quite confident that eventually that's going to come through, probably with a little more help from the government in terms of stimulus.
Is that where the upside for Chinese markets lie, on the expectation that the government will come in, whether on the fiscal side of things or the monetary side of things? And why hasn't that already happened?
I think, firstly, the government would want the recovery to be steadier than speedier. And therefore, unless there's like external pressure that's pressuring the physical economic recovery, I think the government's quite reluctant to step in order to drive the economic growth. But now that we are seeing some pressure that's coming in or imposing on the physical recovery, I think that can invite some more stimulus from the government in order to drive the economic growth.